Okay, we should be good to go. As always, our Wednesday title, Identifying Current Pattern and Direction in Today's Market. We always have to remind you that trading Forex is a risky endeavor and not suitable for all investors. We're going to be looking at real-time market snapshots, and there's no guarantee that those patterns will be replicated going forward. In addition, the techniques demonstrated here are proprietary and should not be retaught or retransmitted in any way. We certainly don't mind you guys coming and seeing what we're doing. We don't even mind you telling your buddies about what we're doing, maybe showing them some of the things we're doing. Really, that's for individuals who want to take our stuff and profit from it commercially. My name is Jay Norris. I've written a couple of books on trading, which were published by McGraw-Hill and which serve as textbooks for our courses. What's unique about these books is that they both have trading plans in them. The second one has several trading plans in there for the different time frames, which allow you to go ahead and back test that information, those plans that are provided. Transparency, obviously, very important for all of us. My name is Jay Norris. I'm the founder of Trading University, and there's my contact information. We get a lot of questions throughout the presentation, so if you want to go ahead and jot down my Skype or my email address, you can Skype me directly or email me directly if we don't get around to answering your questions. I'm big on methodology, so before we jump into the charts, I always want to explain the method that we teach here at Trading University that I adhere to and that we're going to take a look at today as far as putting the market moves in context. I believe that you should be able to summarize your method as simply and as quickly as possible. Here's how I would summarize ours. We understand the fractal nature of markets and focus on those markets with low non-systemic risk. When I say low non-systemic risk, I mean currencies and stock indices. I mean a market that there's no news that's going to come out and cause that market to drop 50% or worse, such as you might see in an individual stock. That's why I think currencies are ideal trading vehicles. So let me start over. We understand the fractal nature of markets and focus on those markets with low non-systemic risk, and we look to trade at those times where the day-to-day news flow is aligned with the primary or secondary patterns. Those primary, secondary patterns, very powerful. Those are your predominant patterns in today's markets. If you want to know what the predominant patterns are, pull up a weekly chart. They're going to jump out at you. Pull up a daily chart. You're going to have no problem seeing what they are. Those predominant patterns are so important to us. They're also a reflection of not just the business cycle overall, but very definitely long-term trends that we both see in the natural world and the economic world. So it's very important that we look to trade when the day-to-day news flow, you see I've highlighted that in orange, is aligned with these primary or secondary patterns. I think you're getting into a market environment right now where we're starting to see, well, you're seeing that the day-to-day news flow was counter to those primary and secondary patterns, especially the last month and a half. But that things will change quickly, and we'll see on these price patterns when they do. Because if you stay on a market, you can be assured that you're going to see when those changes occur, and they're not that difficult to see. Also, we're going to talk about the patterns. We're going to show them to you. We're going to show you the importance of when direction is aligned with the pattern. But what so many of us want to know is why are those patterns in place? Now, we don't necessarily need to know why as traders, and that was one of the great things that we learned on the trading floor right away. As we used to say, you don't have to know why to get by. But, that's really not how we work. We as humans, we want to know why. And it's not like I question why I'm here or what my role is in life or anything much. But, that is a common theme for a lot of people. They want to know, what is their purpose, et cetera. And that's just human nature. We want to know that. So Today we're going to point out the mega trends that essentially determine the patterns that really, they don't determine, they create the patterns. So, and these are definitely today 4 mega trends that you have to be aware of as traders because they create the patterns that we see. I shouldn't say you have to be aware of them. If you just know the patterns and you know to go along with the patterns, you'll do great. If you understand why, if you have an understanding of why those patterns are in place, what creates those patterns, then you may even have more confidence. The more confidence you get, obviously the better trader you're going to be. Confidence is the lifeblood of traders. You have to have confidence to do what we're going to do. You have to have confidence to risk your hard-earned money in the marketplace. So I'm going to list 4 mega trends that absolutely are affecting the markets today. Number 1, natural events. Any farmer will tell you the importance of nature. Any businessman obviously will tell you the value of nature also. Natural events are number 1 on the list, and they always will be when it comes to risk and markets, and they have been from time beyond, right? We're always have to be aware as business people, as certainly as traders, of natural events. The big natural event right now is definitely climate change. I don't care how it came about. I don't care what people believe. I know for a fact that we are seeing climate change, and I know for a fact that this is going to be reflected in the markets overall. A great example would be the ice pack in the Rocky Mountains in America. Ever since anyone's ever since the first explorers, even ever since the first Indians made their way up those Rocky Mountains, there's been an ice pack on top of them. It's gone. There is no more ice pack on top of the Rocky Mountains. That has huge implications for the American West, very definitely. Your water supply is essentially threatened. Your power source is threatened from the Colorado River, which runs down into Lake Mead, which then runs through the Hoover Dam, which supplies power to everything west of there, out to Los Angeles, San Diego, etc. Not only provides power, provides water too. So that's a big concern for everybody. We're seeing mountain lakes in Patagonia in South America. They're gone. There was beautiful mountain lakes. The hikers would take the tourists up there and catch massive trout. The lakes are gone. They're no longer there. One day the hikers made it up there in the early summer, and the lakes were gone. You guys in Europe, you're probably very familiar with this. Iceland. Just Google glaciers in Iceland, and you'll read stories that the melt from the glaciers has gotten to the extent that they're seeing land that hasn't been exposed since 1550. They're seeing land that hasn't been exposed in nearly 500 years because the icebergs are melting at such a rapid rate. These are, no doubt about it, they're a big deal for us all, and they're essentially going to be reflected in the trends we see in the currency markets also, and we'll get to that too. But let me just point this out. If Lake Mead drops another 12 feet, by the way, the Hoover Dam will shut down. There's a mountain lake just over the Continental Divide in Colorado, just west of Denver. It's down 14 feet this year. The one lake, Lake Dillon's down 14 feet this year. If that lake dropped 14 feet this year, what's to say that it can't drop another 12 feet next year, right? And if it does that, guess what? The Hoover Dam's in deep trouble. So now, while this is a problem, it's not necessarily a cataclysmic problem. I want to move along too quick. I don't want to belabor the point. But what happens if the Colorado River does drop another couple of feet and this causes problems at Hoover Dam? Who do you think is going to pay for that? The government, right? Everyone from in Arizona and Nevada, Southern California, they're going to turn to the government for the solution. And that solution is going to cost money too. It very definitely will cost money. And we'll get to that when we cover number 3 megatrend, which is government economic policies. But number 1, natural events, very real problem around the globe, particularly for Western America, particularly for California, as if they didn't have enough problems, right? And we'll talk about that, how that's going to affect markets, and show you how it is affecting markets. This number 2, the second megatrend, demographic trends. Demographic trends is very important for us. It's essential that you have workers coming into the workplace to replace those folks that are retiring. It's essential that you have people that are in the workforce that are making a decent buck so they can continue to consume to replace people my age. People, I don't go out as much. We don't consume nearly as much. We're very happy with, what we have already in our home and in our driveway and our garage. There's really no more room for us to consume anything more, but we need 20 and 30-year-olds to go out there and buy cars and refrigerators and homes and all that good stuff. So demographic trends, very important. This is something that's going to work against Europe. And again, it's not a cataclysmic event. I mean, over time, you'll have new immigrants coming in. They'll have kids. They'll get educated. They'll buy houses and cars too. So, it's not anything that's going to end the world, so to speak. But demographic trends, very important for us. They favor Australia. They favor the U.S. They do not favor Europe. They do not necessarily favor Canada. And believe it or not, they don't necessarily favor China either. So demographic trends, very important for us. That's currently a negative for Europe right now. Number 3, this is probably the most pronounced that we all see on a day-to-day basis, and that would be government economic policies, i.e. zero interest rates. It's really been a race for the major economies to get their interest rates as low as they can go. The Federal Reserve published a paper about a month ago. The New York Fed desk, and the New York Fed, that's kind of the press arm of the Federal Reserve, the Federal Reserve Board in New York. They put out a paper titled Negative Interest Rates. If the Fed is putting out a paper, Negative Interest Rates, and talking about what could happen if the Fed actually charged interest to people to hold its, for banks to hold its money, and then banks in turn would have to charge people to hold their money, what would the changes of that be? It may come as a surprise to people, but if it does happen, it shouldn't then be a surprise. If the New York Fed already put out a paper on this and it happens, we can't say we're surprised anymore. They gave us a big heads up on that. Now, what could happen to create negative interest rates? Well, number one, the trend is already down in interest rates. There's no doubt about it. When a government buys its own bonds, or when the ECB buys up Spanish bonds, they're buying those bonds, and that's that. It's putting upward pressure on the price of bonds, downward pressure on interest rates, so that's what happens. Now, go up to number 1 on the list. You have a cataclysmic natural event. Who's going to pay for that? The government, as they say in America. The government's going to have to pay for that. So the feds are going to have to step up, and when Lake Mead drops another 6 feet and everyone's about to panic, the government's going to have to step in and say, don't panic. We're going to figure out we'll desalinate water in the Pacific Ocean, and we'll get you guys water. So it's not a big deal, right? Well, it's not a big deal in that they'll get past it, but it is a big deal. The government's going to have to pay for that. So if you think interest rates are low because the Fed is buying all the Treasury's bonds, think what would happen if the government all of a sudden had to step in and build all these things to get fresh water going again, right? That wouldn't be a pretty thing. So I think at that point, they may not have a choice as far as going negative on some of those short-term interest rates. So don't think that zero is the floor in interest rates. And if you go ahead and Google negative interest rates, you'll see some interesting examples of how that happened in the past. So if it happens, don't be surprised. Be surprised that they put that paper out a month ago. We could be surprised now about the prospect for negative rates, but when it happens, you don't want to be surprised. And in fact, you want to know the implications for that for the currency markets. Number 4, business trend, mega trend, business shifts. If we talk about natural events, we talk about certainly socio-political events, government events. Number 4, very, very important, is the business world, the business shift. Essentially, companies are moving from exploitive business models to solution-based business models. Now, this is great news all the way around. However, solution-based models are not as profitable as exploitive business models. I'll give you a perfect example. The soda pop. You go in the aisle of your store, your grocery store where they sell pop, right? It used to be all pop, nothing but these sugar-based drinks, Coca-Cola, Pepsi. Coca-Cola, Pepsi are always competing with each other. about 6-7 years ago, you started seeing bottled water, fresh water in there. Now, if you go into that aisle, it's half water. It's the third water, and then 2/3 soda pop. The water's starting to squeeze the soda pop out, right? Who do you think makes more money? The people that bottle the water or the people that bottle the soda pop? Well, Coca-Cola makes a lot more money than Dasani water, right? Because you're just going to sell a lot more of it. It's somewhat addictive too. All that, not the sugar, not to mention the caffeine. You're not going to get addicted to distilled water, but you could get addicted to Coca-Cola, right? So that's a great example of it, where you're seeing eventually you will see the water will start to crowd out that. We saw a crazy trend. I couldn't believe it myself over the last 5 years, where you had these monster drinks, they call them, with like 3 times the caffeine, 9 times the sugar, or whatever it was. It's crazy. It's rat poison. Game, thank you. It's just rat poison. They finally outlawed them in New York City. Mayor Bloomberg said, enough of this. And that's a classic model of an exploitive business model, which makes a whole lot more money than solution-based models. Over time, though, you're going to see the solution-based models are going to start to finally take out the exploitive models, but it won't go without conflict, that's for sure. And the exploitive models where all the money is. So corporations are going to be making a lot less money. Coca-Cola, massive corporation, they're over time, they don't want to see this happen. They want you drinking Coca-Cola, right? They want you drinking that rat poison, Gam. No offense, shouldn't call it rat poison, but hey, if I'm tired and I see a Coke or I see water, I'm going for that Coke, right? But anyway, that's a good model. Also, a model we're all really familiar with is the brokerage model. Remember how wide spreads were, especially in the U.S., like 5 years ago? FX 666 or FXBS, showing you a 6-pip spread in the dollar Swissy, right? Now what? It's coming down to 3 pips now? Well, that's just common sense. Their way of gaining market share is to take it from FXBS. FX 6666 has to get the business from somewhere, so they lower their spreads and try to take it from another broker. On the other hand, your more successful firms, they've always had those tighter spreads. So that you're seeing more solution-based models in business than exploitive business models. But these are all incredibly important things that are already reflected in markets now. So let's get to some of these, show you these long-term patterns in the markets already, and then we can point out some of the reasons why here, some of the causes. Now, I'm not necessarily big on cause. I focus on effect. As a trader, you have to focus on effect. But as I was talking about before, if you understand the cause, that's going to give you a lot more confidence as a trader. So these are the trends themselves. This is the why. This is the cause. Now let's get to the effect, some of the charts. Here's the Australian dollar. And let me back out to a weekly. Well, here, let me switch so you can see that. Okay, you guys should be able to see the chart. Here's a weekly chart of the Australian dollar. The Aussie dollar is going to benefit from 3 of those 4 megatrends. Number 1, natural events. You may think that the Aussies don't necessarily have a lot of fresh water. That's true, but given that you have global warming, there's going to be a big demand for desalinization. I think the Aussies are ahead of the curve on that. They're pretty good at that. The big plus for the Aussie dollar, and why we see that we call it the grand pattern. Number 6, I number the patterns now. Number 6, the grand and the primary are essential for you. But you see that grand pattern is definitely up. If we go ahead and mark these isolated lows, you will definitely see that you have a bullish pattern here, right? So the pattern is bullish for a couple of reasons, but a big reason there, let's just put a channel on it. A big reason you have that long-term bullish channel, that grand pattern's up, and that primary pattern also up, is because of demographics. The Australians have a huge advantage in demographics. They have one of the most enviable demographic pyramids that you'll see of a modern economy. Next time I'll have to break out those pyramids. I thought of it, but it was a little too late. We'll break out the demographic pyramids. It will show you the importance of demographics. But Aussies have a big advantage when it comes to demographics. Number 3, government economic policies, i.e. the zero interest rate policies we see across the globe. The Aussies have an advantage here as business people because they have a healthy enough economy and they still have a pretty good credit rating where they can afford to pay interest, right? They're paying what? They're paying 3.5%. 3.5% interest, pretty darn good compared to possibility negative rates here. You have zero rates in the States, right? You have pretty low rates in Europe still, and it's not as though they're going to go up. Believe me, rates aren't going to go up because business is not about to pick up to that degree to justify higher rates. So we're still very definitely looking at a lower rate world. On the other hand, the Aussies stand out like a bug light because they've got that yield. The Aussie pays 3.5%. Even if they were to ratchet that down a little bit, it's 3.5% times 50, right? If you buy Aussie dollar in a Forex account, you get the carry, right? You get the interest on if you buy a standard contract, you collect interest on $100,000, right? So you put up $2,000 to collect interest on $100,000. Now, all things being equal, risk being what it is, if the Aussie goes down, you're going to lose all your money. But if it just holds steady, you're going to make a pretty penny, right? Now, obviously, businesses aren't going to run right out and do that at 50%, but they may consider buying Aussie at 5-1 or 10-1 so they can capture that yield. So that yield very, very important. For us, Aussies are going to be a big benefactor of that. So when it comes to fresh water, they have an edge because they're surrounded by water, and they've always been surrounded by water, so they understand the importance of desalination. They're not like the western United States that's totally reliant on snow melt and rainfall in the Rocky Mountains, which there is no more snow to melt. So Aussie's got a big advantage there, and the Australian dollar will stay strong. Will likely hold this overall pattern because of the economic policies of the other governments. The euro obviously has to step up and buy their own debt now. They've got to eat their own cooking. The U.S. has been doing that for some time. The Aussies don't have near the problems, just because they're younger. They have a much younger population. They have a huge advantage in demographics, too. So Aussies have a lot of advantages based on those megatrends, and because of that, it's tough to knock this guy down. We were looking at it on an hourly chart today. We were looking at the possibility of a steeper correction yesterday, but guess what? The Aussie hit the brakes, and now it is putting in a little bullish pattern there. And when we look at, we draw our own pattern lines, we start to see why, because when we put our pattern lines in there, we could see that you're above what's probably going to be well, for us, that's definitely an attractive buy zone between that the purple line and the green line. So it couldn't even get to the 50%, and it's starting to turn higher. Now, that's not to say you run right in and jump up. You'll still have corrections in markets. I mean, that's the fractal nature of markets. They'll always correct, but the key is going to be to stay on top of these markets when they do correct and stay on top of them for the right reasons. And this is very definitely a market that you want to look at from an investor standpoint. It's a favorite amongst sovereign funds also. Paul Volcker, very good. Paul Volcker says the Israelis have advanced desalination as well. If there's one trade out there I'd want, it'd be long, good company, good desalination companies. Okay, fine here. Gam said one impact I think the recent growth in China and hostilities will have on Australia. That points towards, well, that's kind of a combination there. That's demographics. And that's also, that's the business shift that we're talking about, moving from exploitive business models to solution-based models. That totally highlights that the only way you're going to be able to do business is if you have solution-based models. You're not going to be able to exploit anything more. Yeah, that's a problem. That's a serious problem over there. But it's something that would cause reaction. That'll give you a reaction lower. And I'm kind of surprised that you didn't see more of a reaction lower to it. The yen is actually strengthening now. So kind of surprised it didn't give you more of a reaction lower, it's not impulsive behavior. It won't create impulsive behavior in the market. So it's big. I mean, it's a bigger problem than the tsunami from an economic standpoint, but it's not so big that it's going to reverse a market. So these long-term patterns we're seeing now are supportive of the current patterns you see in the currency markets. Something like that, a reactionary event, you're always going to have them. That's why there's risk in trading. That's why we use stops. Kind of surprised it hasn't had more of an effect. But for now, they're shrugging it off pretty good, right? And if this proves to be a bull flag, then you're probably going to get back to reactionary price behavior here. So it's going to be interesting to see. Next market, Aussie yen. The long-term trend in the yen has been very, very bullish. Obviously, the yen itself has been very, very bullish. That's a trend that you have to look at that trend and you have to think, well, it's supported by these other megatrends. You don't want to argue with the market, so I'm not going to argue with the strong yen. I never want to argue with the market. So when I look at Aus yen, I see, well, yeah, that's a market that it has the Aussie is the base currency there. I like that overall. However, I don't see it having the same upside that the Aussie dollar does right now, at least until you could take out that number 4 there, that number 4 resistance right there on the daily. So until you could take that out, you got to think that Aussie dollar's the way to go. Now, it's definitely Aussie yen, definitely a market that would be interested in buying dips in if we get an opportunity, to shake out some stops down here or even better down there. Yeah, you always have to consider that. But for now, you can't buck that strong yen trade. If you're long Aussie yen, that means you're short yen. Yen still a pretty powerful market. It's a benefactor of the government economic policies. We talked about the zero interest rate policies. In fact, Japan has already seen negative interest rates. Now, negative interest rates means that the government's buying its own debt. That's bullish for the debt market because no one bigger than the government buying your debt, right? So, it's just, that's a funny one there. The yen, until that yen turns, I don't want to play with it. It's been known as the widow maker for years. People who bought dollar yen, their wives end up widows, right? So don't want to buck the widow maker. At the very least, we don't want to mess with this market until it can clear that resistance level right there. So Aussie dollar looks much more attractive to us than Aussie yen. Here, the euro US dollar. Everyone talks about the obvious problems with the banking crisis in Europe now. From our perspective, I've got a retracement in the way there. We go back to a weekly chart. From our perspective, Europe's problems stem from it more than just its current banking problem. That's a symptom of the demographics overall. We don't necessarily see the demographics overall improving anytime soon. On the other hand, you have bearish demographics, and certainly the downgrade, economic downgrade you've seen over the last couple of years has been bad too. But on the other hand, you have government economic policies, number 3 of those megatrends, working for this market. However, the bottom line here is the primary pattern is down. The day-to-day is up. You even shifted that secondary up. However, when you look at this move here relative to previous bear market rallies, I'll just take my extension tool and we'll take that move that happened in late the second half of 2011, and we measure that out. You can see it's almost identical. So, I had that secondary rally there. Here's the secondary rally there. Guess what? It's topping out right around at that same distance that guy did. And remember when I talked about the method I follow, we look to trade when the day-to-day pattern is aligned with that primary or that secondary. Currently, the day-to-day is aligned with the secondary. You just did shift the secondary when you essentially reversed that guy right there. You reversed that down pattern there. However, the primary is still down, so I look forward to the possibility. Okay, we can remove that. I look forward to the possibility of a sell setup in line with that primary pattern which also happens to be in line with this grand pattern overall. Here's your grand pattern. I don't have that marked. So very definitely we're interested in, as always, when direction is aligned with pattern. Currently, there's the overall picture of it. I go to the daily. That is the pattern. You can see the orange line is a pattern, and there's your grand pattern there too. But what's up? Direction is up. So direction is up, but pattern's down. So we need to see, we only want to trade when direction is aligned with pattern. That's the title of the presentation. So that's when you want to be in there trading. Currently, direction's up, but pattern's down. So something's going to give, and I would think it's going to happen sooner rather than later. You're at a very interesting time where you have a pretty good seasonal down for asset class markets. So given that all these markets, everything's so tightly correlated, if you do get a correction in the asset class markets into September, into October, then you'll probably see a turnaround with this guy. I would love to see a turnaround here because that would be in line with that all-important primary pattern. The primary pattern, you can see Mark is asking about the primary pattern. This would be your primary pattern from here down. This would be your grand pattern, and your secondary pattern just did reverse. The secondary is bullish, but that doesn't mean a whole lot to me because if you take away our short-term patterns and you just look at the grand pattern, the primary pattern, and the secondary pattern, two of the three are bearish. So you just break it down that way. You have two out of three long-term patterns are bearish. Hey, I'm going to be very, very patient. I'm going to wait until John Paulson and all the rest of those smarter than the devil hedge fund, Wall Street hedge fund guys, once they cover the last of their euro shorts, potentially somewhere in here, then we'll take a look at reshorting the euro. But the mega trend that supports the bear side here is going to be demographics. Also, probably no one is more in tune with that business shift from moving from exploitative business models to solution-based models than the Europeans, and what that's going to mean shorter term, longer term, and shorter term is less corporate profits. As companies bite the bullet and move from exploitative business models such as selling Coca-Cola to solution-based models such as distributing spring water, which you don't make as you don't have a big markup on that. As they make that transition, that means a lot European corporations won't be as profitable because they're making that shift. U.S. corporations will make that too, but probably not as quick, knowing how things go in the U.S. So Europe, you got demographics working against it, and you have the business shift working against it too. But you do have, everyone respects the ECB as we saw in this big rally here. So hey, it's still a market. It's still going to go up and down. So that's a fascinating one that we keep an eye on. Euro yen. Well, I don't want to spend too much time on that. Euro Aussie. This is a very interesting one. This is a really interesting one. Euro Aussie. The secondary pattern is still down. You could not eclipse that pattern line. So this trend is still down. So boy, that's a nice one, right? Here's your pattern line there. That was a 50% pattern line held. You have your 2/3 pattern line, 2/3 or so approximately. So that held. So this is Euro Aussie is a market where the primary pattern and the secondary pattern are both down. So we get a day-to-day shift, and you can see you have a shift on the 4-hour right there. So potentially this is a market that we're looking at right now on the downside, and it's one where you essentially have all the mega trends supporting that. Demographics definitely favor the Australian currency over the European currency. Natural events, climate change has been pretty rough on Europe. I mean, I'm more attuned with what's happening in my backyard here in America, but you had some pretty rough winters in Europe lately, and you've had some strange summers too. So the Australian overall, the Aussie, the climate in Australia is somewhat stable, I would think. But really the demographics work against Euro. The economics definitely work against euro in favor of the Aussie too. So short euro Aussie, potentially a big one we're looking at here. Next market we'll take a look at would be the pound dollar. I don't want to run out of time here. Pound dollar, you know, the pound's pretty strong. I like it. This is one where, you know, I'm not quite sure how it fits in. Any island-based economy tends to be pretty resilient historically. And also, you're in an island, you understand the value of, you're not going to run out of water. You understand the importance of desalinization. So I'm sure the Brits have a pretty good lead on that. Not sure how they hold up, you know, from an economic standpoint with that zero interest rate policy, but this is a market that the pound you don't have to worry so much about, such as you do Europe. Here's a good looking chart that I like. I think the pound, I think you see 170, and I've been saying that. I think when you take that out, I think there's enough money out there that's looking for a home that, you know, will find that, hey, you know, the pound's not a bad place to diversify. You know, the U.S. dollar is always a concern. Europe's a bigger concern. Those are your two biggest currencies in the world, the dollar and the euro. So there's still plenty of money in both those currencies that would rather not be in those currencies. And, you know, they're definitely in the Australian dollar, but I think the pound wouldn't, not a bad target. If you're looking at a zero interest environment, pound they have a pretty good historic track record of safeguarding money. I think it's a better bet than Europe anyway. So pound, you probably have some upside. This is not a bad market here. I'm kind of hoping for a correction in asset class markets. I'm hoping that you see that stock market seasonal play out and you get a sell off in stocks, because that should knock this market down and give us an opportunity to perhaps buy a dip down here closer to 158. So I like the pound. I'm not quite sure which of those megatrends supports it, other than, you know, it's the least worst choice compared to the euro and compared to the dollar. So you may see pound strength just off of that, because it's an anti-dollar or an anti-euro bet. Another market I like would be pound yen. However, not yet. Not yet. You know, every time there's problems in Japan, you get a tsunami or you get that problem with the Chinese, what happens? The yen strengthens. So, you know, I was watching pound yen. I was kind of hoping it would overcome that pattern line, maybe close above it a couple times, then give a correction. I'd be more interested in it. You know, this is one where, you know, maybe not this quarter, maybe not this year, but I like the overall pattern where you have a double bottom here historically. You have a series of higher lows here. So it's not bad, but guess what? It hit resistance and boom, you came down. So it has the problem that if you're long pound yen, you're short the yen. Being short the yen has been the widowmaker trade. Alex is pointing out some of the advantages of the pound. Gamma, you're a Brit yourself too? So you have plenty of water then. That's good. Water is a good thing. It really is a good thing going forward for modern economy. So pound yen, you know, maybe not this quarter, maybe not this year, but I like the overall pattern there. One day, dollar yen could bottom. But you know what? I'm a big believer that trends don't reverse. Indeed. Very good game you're trying out now. But I'm a big believer that trends don't reverse. The trends in place now, they're in place for very important, very specific reasons. Those megatrends we talked about early on, those, you're not going to reverse those. And no government is big enough to reverse those, by the way. Rule number one in Dow theory was no one's bigger than the market. That's true. Mario Draghi's pretty big. the Federal Reserve, very big too. The ECB, they're big, but I don't think that Draghi's going to reverse the primary pattern and that grand pattern, which are both down in the euro. I don't think that, I think that the Fed, they're very, very powerful, but as much as they hate to see zero interest rates or even negative rates, I don't think they're in a position to stop that, because if they try to raise rates, then the whole shebang collapses. The market, the stock market, which they've worked so hard to prop up, businesses which they've worked so hard to take the debt off their books, absorb the private sector debt with public sector debt. It's worked. It's kept stocks. It's kept everything up and running so far. So I don't think anything's going to reverse these powerful patterns in place that we see now. It's great for traders because you can have confidence, but you have to be very careful. You have to be patient. Let those secondary patterns blow through, and then get yourself in position with these major trends. Next market, the Kiwi. I like the Kiwi. Love the Kiwi too. It's a small little economy, but you know what? They have a good history. You have rule of law. There's a lot to be said for rule of law. Higher highs. So good looking market. The Kiwi, would love to buy a dip here. The primary trend's up, the secondary pattern's up. Also, love a dip. You know, I don't like the word hope, but I am kind of hoping that you get a stock market correction, because all these markets are so tightly correlated that if you get a stock market correction, it takes down even these healthy markets, and you get an opportunity to get in there. So the Kiwi, love it. Wouldn't mind buying a dip in here. Look at a weekly chart. Again, the Kiwi is really, it's got everything going for it across the board. And, you know, the Kiwi's a smaller economy, and, you know, they've already made that business shift, and they already understand it. They were pretty smart overall, and that they really didn't let the big multinationals with their exploitive business models in there. So they've kind of already made that shift. They never got hooked. They never got hooked on the juice to begin with from exploitive business models. So yeah, it's a cool country, reliable, rule of law, good interest rate on it. So you gotta like the Kiwi long term. I tell you what, the best way to view markets, the best way to approach all this stuff is think as though not only you have money, but you make money. Okay, meaning you're sitting on a pile of money and you have a cash flow coming in every day. If you start to think like that, that's the mindset you need as a trader. You understand you have to protect your capital, but at the same time, it's your job to go out there and try to find some kind of rate of return. Otherwise, you're going to have all your money in U.S. banks, and you're not making any money there. In fact, they may start charging you for the luxury of holding your money. So, you know, the New Zealand dollar, to me, that seems like a pretty good choice to start to diversify some of your holdings in there. And not only that, but start to add to those holdings too. Every payday, like so many workers have a 401k. Think as though you have a big 401k and you put 10% of your earnings in it every payday. So you start to see you got to protect the ag, but at the same time, you've got to find some place to grow it too. To me, the Kiwi, hey, you got to deploy, you've got to get a percentage in the Kiwi from my perspective. So Kiwi looking good. I think it'll continue to benefit from that. Keep in mind, all these patterns, that massive rally you see from 09 on, there's a reason why that's there, and I don't see anything on the horizon that's going to reverse that. Sure, you'll have, that's not to say you're not going to have market corrections, even market panics, but I think overall, they provide more times opportunities than not. The Kiwi, from my perspective, looks a whole lot better than a U.S. bank or a European bank, right? So Kiwi looking good. Dollar CAD, really I should show you CAD Futures. So you see a bull market, because the CAD is a rip-roaring bull market. Let me show you the futures chart. There it is. There is our brave neighbor to the north, the Canadian dollar. It's a bull market. It's They've got a lot going for it. The one thing they don't have going for it is demographics, but they're working on that. They're definitely working on it. They have those long winters up there, so they have a lot of kids come the fall, right? So the Canadians are working on their demographic problem, but they've got they've got a good high rating as far as debt rating. They definitely have water. They definitely have food. They definitely have energy. So dollar CAD, it's hard not to take advantage of that. And actually, U.S. workers are seeing more and more that they have a Canadian bond fund option in their 401ks. So you'll continue to see money flowing there. So I don't like dollar CAD. I do like long the CAD. So I don't know if we could figure out what to pair this against. Probably EUROCAD. I like something I can buy, though, because I'm kind of a bull. So EUROCAD, you want to sell it. You know how amateurs think? Here's how a professional thinks. He puts the chart in the middle. An amateur, here's how an amateur looks at the market. They go, that market's so cheap, we have to buy it. Well, it's really not, though, when you look at it in that way. So EUROCAD, you probably have some more downside. It's probably a rally that you want to look at selling. This is the chart I like, though. I was just showing it to you. Keep it simple. Just buy the, look at that bull market. It looks like you potentially correct here as you see dollar strength, but overall, I like the Canadian. And, I was saying, maybe we look at dollar CAD at the end of the quarter. Now I'm thinking end of the year. And I'm thinking why? There's just easier pockets to pick as a trader than dollar CAD. So if anything, I still like selling rallies in dollar CAD. Cat pips. Yeah, we're almost there. We'll definitely cover that. And if I don't get to it, you guys just send me a Skype. I'll give you my contact information again. So that was CAD. What's next? We'll get right to the yen. JPY. I never know what to make of JPY. I say that every time I look at this chart. I go, I don't know. I don't know what's going on here. I mean, I don't even know how to categorize it. The primary pattern is down. Okay, where's the weekly? Okay, there's the week. That says it all. There's no doubt in my mind that that's a bear market, right? Oh, here it popped in. On the other hand, you do have a higher low, right? But it's still the widowmaker from my perspective. I wasn't biting on that change of direction there. It hit our pattern line. You couldn't close above that pattern line. You got above it. Basically, you just hit a bunch of buy stops out of there, and now it's slumping right back down. I don't know what to make of dollar yen, but I know this. I'm not big on trends reversing, and this is a pretty big bear pattern here. So I guess give it time. At some point, those poor demographics will turn around. But you don't fade the Japanese investment class. They've got a lot of market, or they got a lot of money. They're very, very savvy. You've seen them take beatings in the past on the tsunami. They're taking a beating in China, but yet that currency won't weaken. Dollar yen's perpetual bear. Hey, I'm in front of live markets all the time. We're with you guys on FX Street a couple times a week now. So we'll be there when things turn around. But for now, they haven't turned around, and I'm sure not going to bet on. I'm not going to go counter trend on anything right now because the patterns that we see are so entrenched, and we see those massive mega trends. Why? We see the causes of the patterns. We see the effects in the markets themselves. So I'm not going to fade this bear just yet. Maybe we'll take a look at it closer to the end of the year. Alex, crude oil. All righty. Crude, it's very interesting. I'm glad to see this chart because, we all need lower oil prices. And when you break out the long-term chart, you could see that's our sell zone, and you can't get above it. And that's the long-term chart. You go to a daily chart, you're going to see that same pattern here. So you have two bearish patterns overlapping. which I like seeing. I wouldn't mind seeing gold do that, but gold's not going to do it because gold is, that's the fright, the scare trade. So there you go. You see that pattern again overlapping. So that's kind of cool. I don't know what to make of it long term though. I honestly don't. You have a temporary sell off here. So interesting that you're seeing that sell off. I'd like to see it, but I think we all know better. I think let me ask you, what would you rather do? Buy crude oil down here? I think this is potentially the new floor in crude, 70 or so, 65. Would you rather be a buyer at 65 or a seller at 95? Well, wow, 91. It's dropped $10. So nice sell-off. I like that you had two patterns, bearish patterns aligned. That's what we look for. But I think from a really long-term standpoint, yeah, same pattern as Aussie yen, CAD. That's right. Yeah, so from a long-term trader standpoint, I'd rather be a buyer down lower. But what doesn't benefit crude is that long-term business shift from exploitive business models to solution-based models. Solution-based models are going to game crude. In the long run, it's like the Saudi oil minister said. He said, the Stone Age didn't end because they ran out of stone. The age of crude oil won't end because they run out of crude oil. It'll end because they come up with solutions that essentially a solution-based model, green energy, wind, seaweed. The U.S. Air Force has jets that can fly on chicken fat. They have jet engines that are powered by chicken fat. So, the dominance of crude oil won't end because they run out of crude oil, because they come up with an alternative. So all I can think is that long-term shift from exploitive business models to solution-based models in the end will catch up with crude. But overall, I'd look to be a buyer down here rather than a seller up there. You're still in a situation where if Israel goes into Iran before the U.S. election, which at least 50-50, if not a higher probability, then you could see a spike there. So it's an awful tough one to carry short positions through there, maybe puts or something. Yeah, that's spot on though. It's just like Aussie yen, right? Good looking, looks just like Aussie yen. Well, hey, that'll do it for us. Thank you so much for attending. We always like seeing you. Here, if you want to know more about what we're doing, here, let me show you the site. You could sign up here for some freebies. If you go to our site, you click on education, and you could sign up for our live market analysis. There's a in-depth video in there you can see for free, and you can sign up for our free core concepts course, which will give you some good beginning stuff for free. And if you want my contact information, you guys always have a lot of questions. If I don't get to them, or you want to know more about what we're doing, I'd be happy to have you on my screen for 20 minutes, even a half hour or so, and I'll answer any questions you have about the methodology, and I'll show you essentially what we do. Be happy to do that. So here's my contact info. Skype is the easiest way to get a hold of me. There we go. Yeah, I'd be happy to do that. You guys have any questions or you're curious about the method, shoot me a Skype or shoot me an email, and you can come on my screen just like we show you now, or we could do that one-on-one if you have specific questions about the methodology that we teach and the methodology that we follow. Be happy to do that for you. Very good. Paul Volcker, good to have you again. Paul, I'm sure you're concerned. You have those same concerns we have about those mega trends. And hey, it's just it's kind of silly to bet against long-term patterns. It really is. So from my perspective, I look for more things. I look for things to continue rather than not. I think a lot of new traders they have a bad habit. They get in that bad habit of wanting to pick tops and bottoms because they perceive themselves as getting in at the bottom or getting in at the top and having low risk and riding it all the way. Well, the only time you want to pick a bottom is when it's you want to try to pick the bottom of a correction in line with the overall pattern. Hey, Paul, very good. Appreciate that. So you definitely don't want to fall into that trap of thinking you're smarter than everyone else and you're going to pick a reversal in a market. Guess what? You know, in the economic environment we're in now, you're not going to see reversals. You saw those patterns we talked about. You know, I think we're more likely, from my perspective, we're more likely to see negative interest rates than we would be to see a reversal in the patterns that are in place right now. I mean, it's that's how entrenched these patterns are. So, you know, you may not like having to buy the Aussie at you'd rather buy it at 95, but you may not have that opportunity. So you may have to buy it closer to par, or hey, if it breaks out, you may have to pay 104, 105 for it. That's the beauty about being a short-term trader too. Is you may perceive the market to be risky at certain levels, but if you're a short-term trader, you make your hay on the long side or whichever side during the day, and then you're flat at night. Buy high, sell higher, sell low, buy lower. That's basically the formula, and that's been the formula for some time. So when you hear people say, well, this time is different, I'm going to pick a top, this time it's different. Well, come on, things really aren't different, right? So as always, we like having you, we like seeing you, and I'll be back next Tuesday. And there's the site again. There's if you go to click on education, and you could sign up for our live market exercise or sign up for the free core concept. Cat Pep, as always, is my pleasure. And we'll see everybody next week. Thank you so much.